Thanks so much for joining us today and welcome back to WAMS Webinar Wednesdays. My name is Ashley Lopp, Marketing Manager at WAMS, and today we are back at it again with DataStream. I've got John and Andy with us today, and we are going to discuss cybersecurity insurance policy and claim rejections and how to handle them. So we'll talk a little bit about, excuse me, the top reasons companies are turned down for cyber insurance and what to do if that happens to you, why claims get rejected, some of those kind of common reasons, and what to do next. And then also just how to best prevent this issue in the first place. And then we will go ahead and open up for a little Q&A. For those unfamiliar, I'll share just a little bit about us. WAMS has been providing IT solutions and support services since 1974. We keep our agreements friendly and approach every contract with a win-win philosophy. And as always, WAMS is dedicated to the success of our clients. With that, I will go ahead and pass it on to Andy.
Cool. Ashley, again, thank you so much for having us. I know insurance is not the thing that everyone wakes up in the morning wanting to talk about and think about, but it's actually what we wake up in the morning thinking about and talking about and love doing that, right? I think, a little bit about us. We are a specialist cyber insurance firm. This is all that we do, not quite 24/7, but close to it. We focus exclusively on selling cyber insurance. We work in direct partnership with managed service providers like WAMS and other cyber security and technology firms to really integrate cyber insurance into a company's overall cyber risk efforts, right? And we believe that insurance is an incredibly important part of that overall effort. The quote that we often use is we're walking backwards into the future, right? So we're trying to make sure and prepare ourselves for the things that we have seen and other incidents that may look like that. But there's also, particularly in the world of cyber, an element of newness and differentness. And so having the backing of an insurance policy is incredibly powerful, and it's crazy. The more experienced the cyber security and technology folks we talk to, the more excited and proponents of having insurance as well, right? It's a little bit like talking to the people who work in the sausage factory. They really know how potentially how challenging cybersecurity can be at times, and how in this world of uncertainty and unintended consequences, that having insurance can be really helpful, right? Kind of to set the stage, I think for those who have not been aware, the cyber insurance market has really changed, particularly in the last sort of 12 to 24 months. So what was once a very easy product to acquire and purchase, you really could get it in sort of with relatively few questions from a large number of carriers without them doing a lot of due diligence on the companies that they were underwriting and providing coverage for, has certainly shifted, where now it's just much more challenging to get coverage. I've heard statistics as high as 40% of firms are getting denials, and the scrutiny around what individual organizations are doing on the technology and the security front is much greater. And that's really been driven by what, I'm sure most of the folks on this call have seen, which is just sort of the continuous drumbeat of ransomware claims and events that have taken place, right? And for every Colonial Pipeline, Nantucket Steam Authority, or other more sort of high-profile incidents, there have been literally thousands of small to medium-sized businesses that have been impacted and seen incidences.
I just want to say that kind of from the managed service side, from an IT company's perspective, it really is because it's so much harder to protect you, and that's because there's so many different variants and so many things popping up, and the moment you're protected from everything that exists, there's 500 more.
Yeah, I mean, I think the cyber looks a lot is kind of a different risk than what you think kind of traditionally gets insured, where if if you have fire insurance, like fundamentally the risk year to year is not changing for your, your building, right? Barring you're living in some sort of like wildfire area where you might have a dry season, right? Like year to year, your likelihood of having a fire doesn't adjust. There's not literally people driving by carrying flamethrowers in their car deciding how they're going to light your building on fire, which is the equivalent of what's going on from the cyber attack perspective. So, the folks that are doing this well, there's sort of this constant vigilance, right? A little bit like someone who is really on top of their health and working out, on a daily, if not weekly basis, and eating right and taking their medicines and doing all this sort of things. I think people should be thinking about their cybersecurity efforts and postures similar to the way that they think about their health and their general physical fitness, right? And so, but even those folks, right? Often those healthy folks, they still have life insurance, right? Because they know, as myself, as soon as I had kids, I bought life insurance, right? Because it's just there's too much often dependent on that, and for those particularly small businesses, when we see these incidences, it's not, it's not, oh my gosh, the CEO of a public company is going to get a bonus, or the security team is going to get fired, right? But company moves on. For so many of these small businesses, this is a business ending type of event, right? Often filing for bankruptcy, or if they survive it, significantly wounded, where they're having to let people go, they're cutting salaries, all of those sorts of things. That's real pain for many of these organizations, right? So anyways, I think you guys get the need. I'm not going to beat a dead horse anymore, but I think one of the things, let's talk about sort of specifically what are the requirements that people need in order to get coverage, or what is allowing people, why people are getting denials when they apply for insurance, right? So the three big things that we're seeing on kind of almost all the applications are multi-factor authentication, right? And sometimes that the wording for that question is a little bit confusing, but really the areas where they want to see multi-factor authentication are around email and around any sort of remote access. So if you're VPNing into a system, if you're using any of the remote management tools, you want to make sure that there's a second factor before you log into those, right? The second is really offsite or cloud backups. That being able to restore your network, your critical data, your critical systems in the event of a ransomware, and that place where you're restoring from, that backup, is not connected to your network. Because if the backup's in your network, it's directly connected to your network, typically and more often than not, that the backups can get encrypted as well. And so you might have them, but they're also, they're inaccessible essentially, right? And the third, kind of the thing that we're starting to see asked for, but not necessarily universally, is around good endpoint protection. So that's endpoint EDR solutions, so endpoint detection and response, or good MDR, managed detection and response. So they, similar, they're also sometimes called XDR, right? That's sort of the next gen AV products. There's a number of them out there. I don't need to go through the sort of specific names, and most of the carriers are open to a number of different solutions and vendors who are used there, as long as it's a good one, right? But that's sort of coming on the bubble and increasingly more. So if you're thinking about, hey, what is the next thing we should invest in from a security perspective that's going to allow us to get coverage, I would point most folks to the direction of EDR, right? Next slide. So let's talk about getting coverage, and John will talk a little bit later about how we make sure that you guys have that, to make sure that you're not going to get a denial when you're applying for coverage. But if you have coverage, and this is a question that we get asked a lot, am I going to get a denial, right? And the biggest thing that we see that causes denials is that a company misrepresented what their security posture was on their application, right? You know, as an insurance company, they are, you know, they follow what they've been told, right? And you told them this is what your security posture, these are the things that you use to determine that they use to determine what you would pay on an annual basis for cyber insurance. If the material facts of that are different than what you presented and attested to, you actually literally signed an insurance application saying that this was the case. That opens you up to a denial, because they expected you to do one thing, and if the risk and the cost of that insurance would be significantly different, right? So John will talk again, about a solution and how we handle things to kind of avoid this, and to make sure that our customers and the folks that we work with and those that are working with WAMS don't face that situation, literally auditing what the answers that you make there and providing evidence and support for that. So next slide. And the third one that kind of comes up, we get a lot of questions around it, is this war exclusion, right? So in every insurance contract, whether that's a cyber contract or a typical contract, there is this war exclusion, right? Because the insurance industry, you cannot have unlimited liability paid for with limited reserves, right? So insurance companies literally have a pile of money that they use to pay claims. That pile of money comes from the premiums that collectively all of their policyholders have contributed, and then they use that to pay out claims. If you think of what like a World War II situation looks like, where entire cities are being bombed and destroyed, there's just not enough. There's not enough capital to cover those things. So that is why the war exclusion exists. Why it comes up more in cyber is, hey, we're seeing that the government said that this attack was done by a foreign entity, a nation state type attack. We have not seen, and we have not seen the war exclusion ever used in a pure cyber policy, right? Essentially, and it partly comes back to attribution, right? It's very challenging to prove who did this event, even if the government announced it, suspects, etc. That has not reached the level of proof, and effectively, no insurance company has tried to get out of a cyber claim because of this war exclusion. So it's our general belief that unless that we were in some sort of live shooting match with a foreign entity, where it's clearly that that these attacks are damaging businesses in relation to that active war, and not to mention the fact that we've not declared war, and I think since perhaps I think World War II was the last time we actually declared war. That these claims would not be denied, right? And we've not seen it, right? And the last portion that goes with this is kind of acts of terror. There is specific coverage for terror related acts, including cyber terror related acts that came in post 9/11. There's actually it's a private fund that the government oversees, and actually the government backstops, that covers terror type events. So if it was a quote unquote terrorist attack, again, there would be coverage for that. So I think that the thing that we see more often than a rejection of a claim is actually that the coverage that a business doesn't have adequate coverage, right? That they have an incident, and our belief is that basically any company should have at least $1 million worth of coverage. And if your revenues are significant enough, somewhere as you're approaching sort of mid-single digit millions or north of if you're double digit millions in terms of revenue, you should be looking to get more than $1 million worth of coverage. But what often happens is that folks think they have coverage and they don't, and so they don't they have a general business owner's policy, what known as a BOP, or a general liability policy, that most of those policies increasingly specifically exclude cyber-related attacks from that coverage. So, or they have significant sublimits, right? So you can go to the next slide, right? So you might have $1 million insurance policy or $10 million insurance policy, but if it has any cyber coverage at all, it is sublimited at 50,000, 100,000, something much lower. So you end up spending that, going through that very quickly, and then you as a business are on the hook for the rest, right? So, and what we'd see is that what we would recommend is that folks have, and last, kind of to get in the details, a good cyber policy wants to cover you against a number of different fact patterns and types of losses. Specifically, if there was an example of an attack on a supplier, or someone who, your stuff is in AWS, or some part of your infrastructure is actually outside of your organization, you want to make sure that you've got coverage there, known as dependent business interruption or dependent loss coverage. A good standalone policy will have that. All the policies that we sell do, but when we see a company not having adequate insurance and not having coverage for what an incident looks like, it's often kind of falling into these categories. So next slide. So I'm going to actually pass things off to John, who can kind of walk through some of the tools and the ways that we handle these.
Yeah, thanks, Andy. And there's lots of different ways that WAMS and DataStream can really come in and help in this aspect, right, of making sure you do get insurance when applying, but also making sure that when you do file a claim that you're paid out. And I'll talk specifically about a couple of them here today. So number one, right out the gate, we do over at DataStream a pre-application cyber insurance readiness kind of assessment, or what we like to call a tool, our CERT tool. And this tool is specifically designed to weed out any potential red flags that a insurance company would see when applying for insurance. Due to this hard swing that Andy just went through in the marketplace, insurance companies are able to be a little pickier nowadays, and they're able to actually now, if you fail or get denied, an application gets denied, it's seen for them as a bit of a red flag. So we want to do our part in making sure our customers don't end up on any of those kind of red flag lists. So doing this kind of insurance readiness beforehand ensures that any of our kind of customers going forward are going to get accepted if they are doing the right things there. And then talking about the actual kind of the claims process, and ensuring that when our customers do file for file a claim, that they are paid out. We actually have an audit process that we do to ensure that we are actually keeping track of all of the answers that we have for the application that we're filling out. Do we have MFA, and making sure that we have that actually documented, and tracking all of that, and making sure so that if we ever do have to go to to court and prove out a claim, we have all the documentation right there ready to go, making it a nice, simple and easy process. And really, when we start to think about this, we think about the connection of WAMS and DataStream and how we all work together, and then really start to apply that to how SMBs should operate in this new landscape. We really think it comes down to a couple basic things. Number one, getting your cybersecurity house in order, right? And that's right where WAMS comes into play. Those are your go-to for your IT, right? Go talk to them to get good MFA, getting good offsite backups, making sure you have your program set. Making sure, number two, making sure we get high quality advice, and that's kind of where WAMS and DataStream come to play a role, right? So WAMS going to be your high quality expert advice on the actual technology side, and DataStream, of course, being on the insurance side. And then number 3 here would be not ruining your reputation, right? And that's actually where those tools that we just went over come into play, right? Making sure that we are doing all the right things ahead of time before applying, so that we don't end up on any of those red flag lists, and we can ensure that we are going to be able to get coverage, right? And that's going to be one of the main kind of places that we can kind of come in with that cert tool and ensure that anybody going out even looking to get insurance is doing the right things and looks really good on those applications for those carriers there.
Yep.
So yeah, did you have something you wanted to add onto that
No,
one,
no, no,
Andy?
no. I would
Yeah.
just say I think I shared it with Ashley, who can maybe share it with the larger group. Actual link to that cert tool, you can do it. And I think the
Oh,
thing that
nice.
people should appreciate is that buying insurance is not like buying buying jeans, right? If you walk into the store and you don't fit, it's not like you can necessarily come back a month later and say, oh no, 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 I got in shape, right? I can fit into these now, right? It's they remember the insurance carriers, they're operating often with limited information. So if they run a scan on you and you come back with a bunch of red flags, they're sort of in this, it's a seller's market right now for them. So they're sort of like, what is it that I don't know? So even if you can now fulfill the things that were coming up as problematic for them the first time, they're pretty wary. So it's often difficult to get off that denial or referral list. So you may be essentially blocked from one of those carriers for potentially forever, certainly for the kind of near term opportunity. So kind of that's what this tool is, kind of highlights, almost like a soft credit check. Let's take care of these things, some of which may not be an issue actually, right? They may be kind of mistake or something, right? Anyways, keep going, John.
Yeah, no, makes sense, absolutely. And really to kind of close it out, this is just to give an idea of really where we do see this landscape heading, right? Is more of a united front out of all 3 areas, right? The insurance and MSPs working together to ultimately lower that end user, the customer's cyber risk out there, right? And so that's how we really view a holistic approach to cyber risk nowadays, and where we really do feel the market is moving. And I was just gonna say, if there's anything else you wanted to add to this, Andy, otherwise we can move into some question and answers, see if there's anything out there.
Yeah, I mean, I think
Any questions?
our model, that what informs kind of our approach, if you see where things have gone well, where is this sort of collaborative approach, right? Like if you're familiar with the Mayo Clinic, right, how they handle medicine, it's not, you're not going from specialists at one hospital to specialists at another. It's you go in and all the specialists are talking and working together, right? And how quickly and effective that can be. It's why, like, literally foreign leaders fly to Minnesota to go to the Mayo Clinic, right? The same, and this is an approach that has significantly worked for the insurance industry in other areas as well. I mean, there's the history of highway safety, and a lot of the safety systems that are in cars are a history of the sort of auto manufacturers and the insurance industry working together to kind of address these, right? And I think that's where we see things going, right? Like, the reason we have safety belts and airbags and all of that is because the two of them got together and realized how impactful that was to save lives, right? And then there's just sort of been this steady drumbeat of improvement on car safety systems. Same in the fire industry, sprinklers and alarms and fire rated doors and all of these different things. And so essentially we're following what we believe to be a very, very established playbook and a pattern that's been successful in bringing down the risks. And ultimately that will also bring down the insurance costs for folks in cyber, just the way we for the most part, you don't walk into a building and worry that it's going to burn down. Or if it is on fire, you're going to be able to get out, right? And that's a significant change than where we were 100 years ago from a fire risk perspective. So yeah, I think we can open it up for questions. Anything the audience has.
Yeah, let's
Ashley.
just hope the cyber world doesn't take 100 years to catch up, right? We can do it a little faster.
Yeah, hopefully not, right?
Heading in a good direction at least. So,
Yes,
Yeah.
I think so.
all right, let's see if any questions come in here. Okay, so one says, so you mentioned that tool, but do you have any sort of checklist that we could share with all of our attendees today?
Yeah, I mean, I think the biggest would be, you know, I would say run that tool and it will provide, you know, specifically for you some items if you do that. But I think that from an internal perspective, in terms of internal posture, I would work with WAMS because they know all the you know, the key areas. But you could look to like one of the frameworks, right? Like you know, the CIS top 20 or you know the NIST framework. But really, it comes down to you know, good general cyber hygiene. So thinking about multi-factor whenever possible, you can put it on there. You know, hardening systems, you know, not leaving any ports, you know, regular patching cadence, right? Those are all very good things to do, right? But the things they really are caring about are multi-factor authentication, good offsite backup or cloud backup, and the third, increasingly EDR. But some of those scanning tools will highlight, like the CERT tool, will highlight some of the specific issues that we may see around email posture, domains, et cetera. Great question.
Okay. Got another one here. Is there a link to the tool? Yes, we will share that with all of you after the presentation. I can shoot an email to all of our attendees with that in there. So we'll be sure to get that to you.
Yeah, it's off our website, you know, the link, and it's just cyber-insurance-readiness. But I'm gonna see if it's in, you know, we've newly launched it publicly. So I should see if you can, if there's a link right on the homepage. If not, our website, datastreaminsurance.com, and I'll make sure that our web team puts a prominent link on it, right? So.
We'll be sure to get that to all of you. Another question here. How quickly can we get a quote for insurance?
Yeah, so you know, for a lot of customers, we can get quotes in literally like a matter of minutes. For if you're significantly bigger, you know, or something's sort of unique about your situation, you know, that may take a day or two. But for most folks, you know, we can do that. And particularly, I know WAMS works a lot with law firms. You guys aren't terribly difficult to underwrite at the moment. Although you have a lot of risk. You know, typically I get law firm quotes back in you know, minutes, and then usually many quotes within a few hours or a day or two. So, and then we can literally, you know, as soon as we have a quote, we can bind that day, and then we don't even need to do payment that day. We can typically do payment within, you know, within 30 days. So, you know, if you don't have coverage, I'd think about getting it yesterday. For sure. Prices are not going down in this market, and getting good coverage. It's easier to have coverage, to get coverage once you have coverage. So even starting to get something in place sooner rather than later is really valuable, because you know, cyber coverage often is covering prior acts. So they, you know, if you can essentially provide some coverage before. And so moving from policy to policy, it gets easier if you have something in place.
And we're seeing it actually more commonly too, just in general, in assessing overall security risk strategy, that is becoming a major category, is to have cybersecurity insurance, where it wasn't as vital before, but now it more than ever, it really is.
Yeah, and there's, you know, unfortunately, these applications can be a little bit of brain damage for folks, and you know, asking a lot of specific questions. You know, that's the benefit of us doing it every day. You know, we can help fill out most of it for you. You know, most of the time for folks, if we don't do it, you know, you can literally go on our website and get a quote and start filling out the application there. that quotes one carrier. We have access to about 20 plus carriers. So, you know, if the pricing that comes back from that, you'll see more. So don't take that as the end all be all best all. We have some more that are, you know, not the insurance industry, not always known for its forward processes and technology. So, you know, it's been a lot of effort for us to kind of connect to all the digital systems of the different carriers, but we're doing it slowly and steadily, and at least on the back end, and now have access to, you know, 5 or 6 that we can quote, you know, in minutes, and then the other up to the other 20, you know, in a matter of days if need be. So, but we can help fill out those applications, work with WAMS to get answers to those, everything we need.
Absolutely. All right, we've got another one here, very specific. So how does it work if you have some coverage with BOP and also coverage with LPL? Who pays that? What if there's a breach but no data stolen? What gets covered when restoring systems to prevent a future breach?
Yeah, no, great question. So, you know, as I mentioned, like our real recommendation is that you have a pure cyber policy in place, that it's not necessarily an extension of the BOP, right? You know, there's been, you know, it's been some moves out of the insurance industry overall to clearly delineate whether policies include or exclude cyber in them, right? So you still see a few policies that have this sort of cyber riders or enhancements. For the most part, we find that they're not great coverage. And so if they look like a screaming deal, there are no screaming deals in insurance, right? So you get what you pay for in many cases, right? Particularly if you go, you know, you get a number of quotes, right? So if somebody's giving you an incredibly inexpensive cyber coverage policy, I would show it to us because we'd love to see it. I bet somewhere in the fine print the coverage is not what you think it is, right? In general. So what I would say is get a standalone policy. A standalone policy is incredibly broad, right? And it's going to cover, you know, the classic. A cyber policy is really many policies underneath it, all related to a cyber fact pattern of causing or related to that loss. And so it's going to cover classic breach, which is the loss of confidential data and the regulatory costs, response, notification of individuals associated with that. We still see a lot of those. You know, but you know, for most cases, the more expensive components of it are around business interruption, right? So a business, you know, particularly these ransomware type attacks, which is now kind of 1 or 2 in terms of the types of the frequency of types of events we see, and almost certainly number 1 in terms of the cost of these events. You know, a third of the loss tends to be business interruption. So the average downtime for a significant ransomware event is something like 3 weeks. And then the company's not back up and running till close to 9 or 10 months completely, right? So, you know, the business is sort of limping along, and a good policy is going to effectively pay, you know, to make the business whole if they hadn't been dealing with some of those incidents. So it's going to cover lost income. It's going to cover unavoidable expenses like rent and you know, rent and employee salary during that period when you were essentially, you know, interrupted, right? The other thing that it's going to cover, cyber crime is a big one. You know, I know for a number of lawyers, you know, they hold significant, they hold client funds, and they take a number of payments. You know, particularly anyone who's dealing kind of in the title industry or the real estate industry, or even doing settlements. The second most common, kind of next to ransomware, is fraudulent transfer, or cyber crime is the other term. Same thing, different words. That's where you actually lose funds. A good policy will cover that as well. Typically, we see sublimits on that of either $100,000 or $250,000. If you're doing a lot of transactions of denominations that approaching, you know, 6 figures, we'd probably think about getting a crime policy, a specific crime policy in addition to your cyber policy. We we're cyber specialists, but sometimes we touch these other areas that are highly contingent or related to the risk there. So that's the other kind of business interruption, cyber crime, and then ransomware. Cyber extortion is the term used for ransomware. So it's that itself is a specific type of coverage underneath the overall cyber policy. They're all included. But again, in those BOP policies, you often see, significant sublimits on ransomware payments. So like we've seen, $50,000, $25,000. That's sounds like a lot of money, but if you're a business and a law firm doing a decent amount of business, and they know you're going to court next day, and they're telling you need to pay a ransom, unlikely they're going to take $25,000 or $50,000. They're going to add a zero to that, right? So anyways, I think I answered, that was a big question, so I think I answered all parts of it. If I didn't, ping another one in. Any other questions come through?
That was a great question. Yeah, I think that is the last one.
Yeah, I think the other thing that we should put up, is if you want to contact us, obviously our website, datastreaminsurance.com. You can reach me directly, Andy@datastreaminsurance.com, or agent or agency team at datastream.com. Happy to chat with you. As I mentioned, this is an incredibly passionate business for us, and we're in it because we've just seen too many small businesses, feel the impact of a significant cyber event, and so we're happy to kind of provide any advice, guidance. There's no charge to you as a potentially policyholder to get a quote. We're paid by the insurance companies, as part out of the policy. So please feel free to reach out to us. I'd love to chat with you, see how we can be helpful, even if it's just to kind of give us a second look at the coverage that you have in place, or think about what you're doing on the security front. Sort of a second opinion on what WAMS is doing, but overall, what we've seen from WAMS. If you do what we're telling you to do, you're putting yourself in a pretty good place. I know sometimes we're often preaching to the choir on these calls, where we're talking to IT leaders and folks who are really trying to move the needle, and sometimes dealing with particularly legal partners who maybe don't understand the risk, and aren't quite on board to kind of entering the 21st century on all fronts. So.
Oh, we did have one more question come through here really quickly. Who are the carriers available?
Yeah, so as I mentioned, we've got 20 plus. So we've got Chubb, we've got Beasley, we've got Hiscox, we've got AtBay, we've got Corvus, we've got Coalition, we've got Cowbell. Yeah, I mean, almost the entire market. We've got Great American. I'd have to go look and see all of them that are available. It's a lot, right? We have Tokyo Marine, Crum & Foster's, Travelers, Great American, CNA. We have most of the folks that are significant. We have Arch as well. Oh, and Axis, of course. Axis is one of our closest partners. So sorry, I should have these in alphabetical order so I can just spit them off in tune. But yeah, I mean, we have most of the U.S. market, right? That write significant policies. So.
We've got one more here that really coming through now. So what coverage level would you recommend? Is there any formula?
Yeah, so I would encourage you to reach out to us directly. I mean, I think some sort of back of the envelope, right? So I would say that you should probably have, about enough coverage that would cover 6 months of your total revenues, right? If you had to use a rough formula, that's probably not a bad place to start. So if you were, for example, a $10 million a year business in revenues, I would think, in and around $5 million of coverage might not be a bad place, right? You might be able to, depending on what you had and what's going on, you may be able to get away with a little bit less than that, like 3 million, right? Every company should have $1 million of coverage. The market is is pretty disrupted right now in terms of pricing, and so what we would do is sort of look and see where is the kink in the pricing, where it sort of makes sense. Let's walk through kind of specifically what the risks are for your business and what the fact patterns might be. How much are you doing? How many privacy records? How much PII do you have in your systems? How much business interruption? Like how real time is your business? How much actual like data and systems do you have that might need to get replaced? These are some of the calculations that go into but around 6 months worth of revenue, and that equation comes from essentially, we think business interruption would be typically, in big cases, business interruption is a third of the cost, right? So if you were down for 3 weeks plus like limping along for another 9, so that basically gets you to kind of 2 months worth of your revenue would be the business interruption portion. That's typically a third of the case of the overall cost. And then you take the other 2/3 are going to be potentially paying a ransom, would be maybe another third, and then the actual remediation regulatory stuff playing the other third. So you kind of quickly get to about 6 months of revenue, back to the envelope kind of number. Right?
Great. And then another question, kind of following that up a little bit. Do you have issues getting over 1 million in insurance?
No, it's easy to get. Right now the market pretty easy to get up to 3, even up to 5. It's starting to get between 3 and 5 is where it's starting to get a little bit more challenging, depending on kind of what you look like. That's again why we like to do the CERT tool. Let's make sure that this is going to be a pristine application going into the carriers before we put it in, and then north of 5, certainly north of 10 is getting more fun, right? But not north of 1's easy. Up to 3 is really easy. I can get up to 3 kind of electronically in minutes usually, for folks who've done the right thing.
All right, great questions. Well, I think
so many great questions.
Yeah, really, really good questions. I think that is it. So I'm going to go ahead and wrap it up. Thank you, Andy and John, for a great presentation. This was such an informative Q&A period too. I'm even learning things, which is awesome. Thank you all for joining us today as well. We will see you next time.
Cool. Awesome. Thanks so much, Ashley, as always. Yeah, anyone ping us with any questions, hop on our website. We have chat there, Andy@datastreaminsurance.com. Happy to answer your questions, or agent@datastream.com. Cool. Datastreaminsurance.com, sorry. Cheers.
I'll go ahead and share your information with everyone as well.
Awesome.
Make sure.
Really appreciate it.
Perfect.
Yeah. Bye.
Thank you.
That's good. Thanks, everyone.